Hi, everybody. My name is Matt Brown, and welcome to the Direct Private Investment Show. With me on the line are some of the heavy hitters at Carofin, which I'm super excited to introduce you to. With us on the line from around the USA is none other than Josh and Jason. Let's start with you, Jason Washington. I'd love for you to give our viewers around the world just the elevator pitch, and then Josh will get over to you, Mr. Green, and then Nash as well. So kick us off, Jason.
Hey, Matt. Thanks for having us on today. So my name is Jason Washington. I've been with Carolina Financial for about a year and a half now. I'm an analyst with the firm, and just a kind of a brief overview on my role with the firm. My work falls into kind of three main buckets. The first bucket being that I assist our senior bankers like Josh with structuring securities and conducting due diligence. The second bucket being that I assist our sales staff with answering any investor questions and conducting any further due diligence that may be necessary. And the third bucket being that I assist our admin staff with conducting any of our administrative agent tasks.
Fantastic. Josh, what do we need to know?
Josh Green, excited to be here. My previous roles are Morgan Stanley and in a large $40 million pension fund where I worked in the private equity and private credit team. Both great preparation to work at Carofin here for the last 3 years. Like Jason mentioned, largely working on sourcing opportunities, getting to know capital providers and companies throughout the U.S., using those capital needs from those companies to structure investment opportunities. And providing those to investors, helping them through their diligence process.
Nash?
Great. Nash Roberts. I'm the Vice President of Sales and Syndication. I've been with the firm for going on 11 years, and my role is more sales focused. And so I'm tasked with expanding our marketing efforts as it relates to accredited individual investors, outreach to family offices, and some limited outreach to institutional investors in the private capital markets. And really the whole theme is to understand what are the criteria for a given investor so that as we have an issuer that is looking to raise capital, we can line up either an appropriate syndicate of high net worth individuals or family offices, or go to the appropriate institutions to close the transaction.
So Jason, I'd like to start with you. When an investment comes across your desk or an investment opportunity becomes available, who decides or who considers its viability in terms of whether or not it gets presented to investors?
The first step in determining the viability of an investment opportunity is going to be gathering preliminary diligence. This could look a lot different depending on the size and stage of the company, but typically it'll involve maybe a couple of intro calls, gathering some financial statements, maybe a financial model, and any pitch materials that the company may have. This is also the stage in which we determine the company's financial need and how to structure a security to best fit that need. Next in the process is called the Investment Banking Committee, and this is really the first formal step in the process. The Investment Banking Committee is led by the senior banker who will be leading the structuring of the security. And it typically takes the form of a presentation of everything we've learned thus far about the opportunity.
And so, Jason, if I may, I'm very curious, how many actually get rejected when you run this process?
So, when we're evaluating investment opportunities as they come through the door, we typically look at, one of the main risks we look at is the speculation risk. And so we evaluate whether the industry that a company operates within has just a high degree of speculation, and that it may be too speculative for us to balance the risk-return portfolio of an investment. A couple of industries, for example, that we've determined are just too speculative at this time for us to be able to structure investments in are the cryptocurrency industry and also the emerging marijuana industry. And I'd say another sector that we typically stay away from is the cells, genes, and molecules vertical of the life sciences industry. This one is also too speculative for us at this time, but this one in particular requires a high degree of specialization in order for us to be able to confidently nail down the structure of a security and exactly the ins and outs of the company. The last reason I would say that we would reject an opportunity is if we don't understand the why. And that's, why did the management team choose to found this business? Or, why is it a meaningful endeavor? At Carofin, we like to stress meaningful investments and vital capital. And so understanding the why is something that we strive to do in every investment banking committee.
Nash, would you care to elaborate?
Yeah. So as an intermediary, which, we've got a website, people can find us online, we're constantly getting reached out to, whether that's through email or through, LinkedIn, what have you, in terms of high-level pitches for companies. And so in terms the stuff that comes across our desk is probably not unlike a lot of professional investors in the private markets where it's, it's in the hundreds to thousands a given year. But in terms of what makes it to our investment banking committee, which is an internal discussion amongst the principals of the firm, we'll generally look at probably around 50 companies a year, maybe a little bit more. And then we go to market with between 20 and 30. And one of our jobs collectively is to figure out, is this who's going to be the end investor in the given security structure that's created? Is it going to an institutional investor because it needs to go an investment group with significant domain expertise that can write a single check, whether that's debt or equity? Or is it something where we can be a little bit more creative and put together a syndicate of accredited investors, family offices, and we can, on effectively a take it or leave it basis, bring in together a pool of investors? And so that's part of what we do at investment banking is, one, as Jason alluded to, can we understand the opportunity? Is it something that we want to represent as an investment bank? But equally importantly is, who is going to invest in the structure that we create? And obviously you don't want to put a significant amount of energy into something where there's no market for a given security that you would create.
Mm-hmm. Fantastic. I want to bring Josh into the conversation. Josh, this IBC, this investment banking committee, I'm very curious to understand, what happens next? So as an example, an opportunity comes across and Jason's like, yes, this is a good one. And it's approved by the investment banking committee, which is internal to Carofin, obviously. Walk us through what happens next.
So at that point, we've gotten a lot of great feedback and points to dig into from the senior partners at the firm. And that really gives us some additional feedback from their experience and perhaps transactions in the same space that they've worked with, or some partners that they may know from their history. But largely it kicks off the deep due diligence process that we run on every company. So we start with background checks on principals of the company and UCC filings to determine if there are any liens and judgments. And this gives us a better in-depth look on who we're working with, and just some additional info that a lot of times, especially for serial entrepreneurs, there may be some outstanding tax liens or, some outstanding issues that the founders themselves didn't even realize. So it helps us anticipate investors that may run that similar diligence process themselves and help us proactively answer those questions. Then we get into the deep due diligence, financial and market due diligence. And this is really us taking our experience, trying to understand the risks around an investment and help us to structure around those risks to make investors more comfortable. This gets into really understanding, is this company in good standing, certificates, permits, insurance, all of that. That's pretty basic stuff. The rest is more fluid, more living and breathing. And so we want to understand the market that the company is selling into. We want to understand the customers and what they need. We do reference calls with current customers. We do reference calls with customers with different competitors. Also with various industry experts and other partners that have experience in the space, albeit not with this company, but give us good insights. Then from there, we really dig into understanding the financials of the company, their projections, and really try to understand if they can execute on their plan to grab the market opportunity they've identified.
And Josh, what are some of the critical issues that come up? I mean, for example, when you're negotiating with the founder, agreeing the valuation of the opportunity and things like that, what typically comes up in terms of critical aspects?
This is really where some of the soft skills of investment banking come into play. You're having to thread the needle between what a founder of a company wants out of the investment and what their actual pain points are, or what their needs and wants are, versus anticipating what the investors that we're going to share this opportunity with need and want from the investment structure. So some founders may be very sensitive to dilution. And so from that, you have conversations on valuation. You still want to be in the realm of a valuation that investors deem attractive, but potentially with some structure that, that mitigates that dilution a founder could see. Other founders really want, to be careful with protections like personal guarantees, liquidation preferences, so on and so forth. And that's something that we can try to find creative ways around that it is palatable to an investor. But again, founders feel comfortable that their pain points are being addressed, and some creative structuring can make both parties happy.
So a bit of creative investment banking goes a long, long way.
Exactly.